So it's Friday. Rates are up, as you can see by the screen. And guess what? They're going to go higher, folks. Check it out. I subscribe to this website called MBS Highway, and they send out a lock alert today. And we track this every single day. And so I just had an office meeting earlier this week where I talked about return on investment, on why do people need to invest in real estate for generational wealth, for their family, for their future, for uh, for return on investment, right? We talked about all the reasons to invest in real estate. Like people who own homes know the benefit of owning real estate, of having it long term, of buying investment property. You don't have many people who say, "I'm so happy I invested in real estate because of the rates." Like very few, right? That small window of people who bought during the pandemic that thought that was the greatest ever. That's it. That's the only people who believe rate is the reason to buy real estate. The rest of the world realizes all of the other benefits, tax benefits, investment strategies, passive income, all of the other things. And so, as I share this with you today, I really want you to focus on not focusing on the rate as the reason to buy. I'll tell you for days, agents are out there talking about rates are 5.99. Now they're 6.5. You got no benefit, right? Like it's gone. And that's if you're perfect, you get 6.5. If you're 3% down with a mediocre credit score, you're closer to 7. It's ugly, right? And that's we got to get away from that conversation. So here's what you see: a lock alert. We've lost 80 basis points in basically one day. And so what does that mean in regular terms? Is if you were looking at a 6.5, or so let's say 6.25 yesterday with no points, today probably cost you 1 point to get that same rate. If you decided you didn't want to pay that 1 point, your rate went from 6.25 to 6.5. That's it. That's basically what it means in one day. Here, I'm going to make this simple and I'm going to show you the 10-year treasury. It's the easiest thing to follow if you're in real estate. And you could see that we were in this trend of rates coming down through the end of February. And when the calendar struck March, look what has happened. It went from 394 all the way up today to 4.39. That is 20 days in the month that rates just shot out of a cannon. And if you look, even in the last couple of days, it's been quite a bit. So a half a point higher in 20 total calendar days. That's like what, 12, 13 working days. And a lot of this is because today we had news from the ECB, which is the European Central Bank, saying that they're probably going to raise rates. We've got everything going on with Iran and oil prices. If you've filled up your gas tank recently, you see what's happening with the gas prices. And so I wanted to get on and kind of show you these charts, because if you look at this chart here of where we're at today, usually you try to hold these lines, right? If you look at this line, held here, came back down, held here, came back down, held here, came back down. Today, we broke above this. And really, what does that mean? I'm going to zoom out a little bit for you so that you can see a further chart. And it's not pretty, boys and girls, because as we broke above this 4.33, the next stop per se is this 4.6. That means rates would go up another 0.25 to 0.3%. That would put us at 6.8% for a good client, right? Maybe 7, back in the sevens. Like it's just crazy. And so if you're out there and your value proposition to try to get clients is rates are 5.99, you need to talk about generational wealth. You need to talk about the return on investment on real estate. You need to talk about passive income, tax savings. You need to look at what the client is paying for rent right now, and what the mortgage is going to be, and what the tax benefit is going to be, and what the principal pay down is going to be. Like those are the conversations we should have with our clients, because this you can't control, right? And if the client was only interested at 599, they're going to say the worst word that we hear in this business is wait. So again, I just wanted to go on and show you these charts because, I wouldn't be surprised if we see this 4.6. Like that could really happen. So I wanted to share this number with you. And again, If you have clients who've got questions about this, about their return on investment, about tax strategy, about investing in real estate, like send them our way. Let us have that conversation. Let us break down the numbers. The numbers never lie, right? The numbers never lie. And so, again, I wanted to share, rates as you can see were higher. And when they were higher in May of 2025, guess what? People were still buying and selling real estate. Like the market's not going to stop. You can't let this move in the market stop you from doing the activity that you need to do to help more buyers and sellers. So I hope this helps. A little bit of a longer video. I apologize, but it's been a crazy 2 weeks. And so I wanted to share with you.